Good morning. Welcome to the third day of the week. We've had Monday and Tuesday building up order flow for a potential busy day ahead. So just checking that I can be heard. Can everyone hear me? Check one, check two. Microphone check. Morning, sir. Yes. Okay, great. Fantastic. Okay, anyone that can't hear me, please let me know. Well, you can't hear me, can you? So if you can't hear me, let me know here. Yeah, exactly. So I'm going to share my screen now. Right. There we go. And we're going to start with the US dollar, guys. Right, so far it's an inside day. The significance of inside days at the close of the day are that there are build-up of stop losses above and below the highs and lows. So it's just worth noting that. Therefore, we can expect the market to, at some point the following day, potentially take out both sides. In this case, that didn't happen. This is an inside day. The inside day, I have an indicator there that shows you the inside days. You can turn it on or off. It gives you yellow bars. Anyway, so far we're an inside day. And if you recall, we were talking about prospects of a move lower in the dollar. We're up high on the week still. We're breaking structure as per this indicator showing us that. Again, that's in my indicators. You can go to Smart Money Concepts indicator. I've got pretty much everything turned off apart from chalk and break of structure, I think. Anyway, so as you can see, we're trying to break down in the US dollar. We've got an hourly M formation. These are reversion patterns, so I wouldn't be surprised if we see support and move up in to test the neckline. So that's dollar strength coming through as we head towards the key part of the US session being the Wall Street Open. That's at 9:30 New York time. So it'll be around about here somewhere, 30-minute charts. On along. There. So perhaps we're going to see some dollar strength coming through, which means what for us, guys? What are we looking for at the New York Open? If anyone wants to care to guess and stick something in the chat, that'd be great. Let me know that you're all awake. Exactly. Perfect. All right, so if we get that pumping up into the New York Open, then across the board, the euro, the pound, the Canadian dollar, the indexes, gold, okay, everything is weighed against the US dollar. So if we're getting strength from the US dollar into the open, then we can expect extreme weakness around the open, and therefore we can look for strength in the indexes, euro, pound, Canadian dollar, Australian dollar. The Canadian dollar, we have the Bank of Canada coming up, and also we've got trade balance data. So I'd just be avoiding the Canadian dollar until after the Bank of Canada, personally. Let's look at these yields. So I'll just draw that M formation for you guys. Okay, so we can expect a move up in the US dollar for the moment. Okay, and that's, well, we'll come to it in a minute. We'll come to the other pairs in a moment. Right, so we'll move over to the yields. M formation there on the 10-year as well. Two-year. M formation. This M is already completed and it's starting to sell off. So let's see how that plays out. The dollar's probably a bit premature then to start calling the pullback. Let's see what happens with this dollar over the next hour. But we want to see it bottom out. We're getting a reverse picture on the yields, which is not promising. But ideally, I prefer to see this bottom out and continue up, but we'll see what happens. And if not, then we'll just have to flip the script and see where we're at closer to the Wall Street Open. Right, Canadian dollar. So we've got imports and exports, and then at 10 o'clock New York, we'll have a whole bunch of data coming out. So we'll have very important ISM services for the US, and some secondary data coming up in the next hour and a bit. So it's a data heavy day. Got the Fed's beige book, Fed speakers, all sorts going on, right? So just be aware of that. And it might be, well, for me at least, I'm thinking maybe it will just be a one and done type of day. Take what you can out of the Wall Street Open. If anything is there to there on a plate, then take it, and just be wary of other data events and potential roadblocks that are coming from the calendar today, right? That can cause sharp movements, erratic price action. So if you've got your stops too tight without room to breathe, you can get stopped out and just see the market go back in the direction of the trend. One moment. So around those events, I'd prefer not to be in anything at all. So maybe the Wall Street Open would be the best way to play today's trading. Okay. Any questions so far, guys? Let me know. Let me know in the chat if they've got any questions. Any questions about what we've covered so far? And I'll come to the analysis that you want me to go through shortly. We'll just get through the main pairs first. Okay. Now, just to touch on the Bank of Canada then, because I guess it's the main event of the day, if not US ISM. The Bank of Canada, probably more of a wait and see scenario. on hold. Um, Inflation there is still way above their 2% target, and you'd expect them to note that within the statement and potentially keeping the door open for rate hikes ahead. So a big surprise would be obviously a hike at this meeting that would really pump the Canadian dollar. So eyes will be on the statement and looking for hawkishness potentially to support the Canadian dollar, or on the flip side, if there's a lack of hawkishness, then you'll expect the Canadian dollar to weaken off. Someone saying here on my chart, I can see Dixie opening lower. Opening? What do you mean? On the day? On the hour? On which time frame? And it will also depend on your broker, because if you're talking about 15-minute bars, then the depending on your broker. What, on the day today? Gapped lower. Um, I don't see a gap on this chart here. Um, well, yes, no, it did. It did gap lower, yeah. So it closed over here, opened over here, moved up, and then sank, moved up. Yeah, it gap lower, and then it was filled immediately. Right, so looking at Canadian dollar, we have M formation on the 30-minute chart, M formation on the 1 hour chart. What do I think about the gap low in the dollar? Not much. It happens. It's nothing, no significance there. It's at the rollover. Charts can be particularly um, out of sync during the rollover, and it's filled quickly. So spreads widen, and they can cause gaps on the chart. So I wouldn't read into it, and that's way in the past now. So the Canadian dollar here, front side of the bullish trend, coming up into let's have a look. Okay, so a resistance area effectively, right? So resistance area. Extending the bullish day. This is the daily chart, extending the bullish trend. But we've got 1, 2, 3. This is the fourth day now of, is that higher highs? Yeah. So 1, 2, 3, 4 days of higher highs. We've got 1, 2. Yeah, this is the third consecutive. Well, apart from that inside day over here, so I'm not counting that. So 1, 2, third day of consecutive higher highs. We have, what was Monday? Pushing twice out of the open range. Once, twice. We have resistance, potential resistance being made here for a move back in to retest the trend line, potentially below yesterday's close for a continuation lower, squeezing short longs and longs over here as well. So break of these lows would be opening risk for a significant move into stops below here. Okay, so I'm leaning bearish on this chart, although respecting the trend line. So if we remain on the front side of that, then prospects offer a continuation higher, but I'm leaning towards a break of structure and a move to the downside. Same scenario with dollar yen. So front side of dollar yen at the moment, very steep move up on Tuesday, subsequent sell-off into longs, testing this structural point over here. We have a change of character as per this indicator, which we talked about earlier in the session. We've had the M formations neckline tested, stops hit, subsequent drop, continuation to the downside favored, moving into this length. We've got our high and low for the day. Let's pull this over. I don't have any expectations of data. I do not hold expectations of data personally. I get my expectations from the calendar, what the consensus is. And if it's above or below consensus, then, and if there's a setup, then you can marry the two together and draw a thesis and trade it. But trying to second guess what the data is going to be is, I'm not that clever. I don't have a desk of economists here and quantitative analysis. We leave that to Goldman Sachs. So I appreciate, I mean, if one is swing trading and you've got an open position and you're worried about every data event and how it might affect your trade, but in the same respect and with all due respect, that's not the way to go about things. You can you can you can use news and data and so forth and put it into your trade plan, but you'll often be disappointed on how the market reacts to the data. Um, Often it's to sell the fact or it's already priced in. It goes completely the other way to what the data, um, in the other way to what the data is saying. So, even if you are swing trading, you should be managing your trade so that your stop loss. I mean, for instance, you might not even want to be in the trade around data, but sometimes you can't help that, and the trade is still open. Um, but it's horses for courses and swings and roundabouts in that respect. I mean, sometimes it goes in your favour. There's a 50% chance it goes against you. So, but I mean, it's interesting to see what the data comes out as, and on the day that can move the market. Yeah, the Bank of Canada is probably going to pause. Right, so that's the thesis for dollar yen potentially coming lower. We're on the front side of that bearish trend so far. Euro dollar, front side of the bearish trend. One, two, 3 days of shorts in the market. Yeah, one, two. This is sort of an inside day, so one, two, 3 days of shorts, including yesterday, and today there are prospects of a break to the upside. That's not to say that we can't break to the upside and continue lower at some point, but it does look as though we're trying to come up in on the shorts. We've broken, or we're testing this structural point at the moment. So this was the lower high before the lower low over here. So I'll mark that red as we need to see that break. And we've got our current low, the low of the day over here. With in fact, now I'm going to pull that up to here. So we've built structure now. So this is the low of the day so far, the New York session at least. So let's call it the low of the New York day, low of the day down there. So we are within this box at the moment. So if you're wanting to go long, it's not best to be going long from up top. You want the price to be down in the lower section of the range to go long. Now, if this is to be a correction, we might see a couple of days of corrective behavior. This is the daily chart I'm looking at. We are down in at a potential support area. Not to say that this can't come lower, but it's just worth noting that we are seeming to be wanting to correct. And in that case, look at the Fibonacci scale on this candle, see if we've already done 50% almost. No, we've done 38.2% of that range so far in today's trade. There's a price inefficiency between this candle, this day, and today so far. So you've got all of that candle to move into, right through the 61.8, targeting last week's lows. So effectively, we've broken out of last week's lows. So is that a false breakout? Possibly. Maybe we're going to move back inside. Moving to cable. Similar scenario to the euro. We've had 1, 2, 3 days of shorts. We had a squeeze on Monday. That was sent lower on Tuesday. Move up. Failure so far to break lower. Getting some dumping action here ahead of data and New York Wall Street opening later on. Prospects for a move up. So we're coming down into, making fresh lows for the day. Changing character back to bearish. Still front side of the bearish trend overall. So no surprises there. We'll just pull that in like this. So can this continue? Of course it can. So we're obviously getting dollar strength through at the moment. So we've come right into this neckline that we talked about. Coming up hard into that. Okay. US 30 continuation trade I have here marked up. Okay, so whoops. Let's go to the daily chart. So we've got this W formation, and it's a continuation trade targeting the neckline of the W formation in here. The 61.8 is eyed. Right, so as the dollar strengthens, the stocks indexes are weakening. Now remember that is ahead of the Wall Street Open. So again, if we get this continuation into the Wall Street Open, let's go into the hourly. Let's let's go to the 30-minute. So we're looking for this to continue lower, and then we can look for the squeeze and an opportunity to go long in Wall Street, in the open, around the open at least. Looking at the NAS now. So the NAS, I drew these drawings ahead of the meeting, so we've now broken this trend line. Right, so we've come up, we've done a W formation on the 30-minute, price coming back into the neckline. Now, it hasn't necessarily broken this trend line here because it hasn't really broken any structure on the left. Just pull that in a bit, try and connect the dots. So, still somewhat bearish here at the moment. But we've had one push, two pushes, three pushes, peak formation low, higher low compared to that lower low over there. So it looks like it's a market that's trying to stabilize after a number of pushes to the downside to rally up, which would go in line with our thesis that we're going to get a dump in the dollar and a push up in the stocks around the Wall Street Open. Okay, so this could be a sort of a now we've got a fair bit of resistance to get through, however. So all of this up here could be resistance. But there's going to be stops above to target if we can get through that. Same scenario, I guess, with, well, not quite, no. Okay. So we've got one, so sorry. Uh, so we came out of the initial balance Monday. So one push, consolidated, two pushes, moved up, and this is essentially the third. All of this here, all of that leg is the third push out of the opening range, which builds prospects of a move to the upside as well for the S&P. It's less volatile at the moment than the Nasdaq. Resistance here. So until we are that neckline of that M formation, it's looking pretty bearish for the time being. We've got this sort of scenario at the moment. But let's see how things pan out over the course of the next hour or so. Yeah, I'm thinking dollar up initially and then down later in the day. Exactly. So at the moment, the dollar is 1, 2, 3 pushes up, consolidation to the right, moving right, consolidating for the blow off to the downside. Or if I'm wrong, then push up, correction, move up. But still, in that scenario, and I'm just going to clean up this chart. So if we were to go to, say, a 4-hour chart, and just look at the correction that's in play at the moment, it's not particularly deep at the moment. If it's going to continue higher, what I prefer to see is like, what do we got here? I don't even know that that's the 38.2 either. But more often than not, no, it's not a 38.2, almost. What I like to see is a 38.2, and that's when I start looking for the signs of deceleration in the correction to ride it higher. It doesn't always pan out, but more often than not, it does. The market will correct um, into the impulse before moving higher. We're not quite there yet with this, so I'm looking for the price to come in and move up. But however, in this case, what's happened is that we've actually taken out last week's highs and last month's highs, and the majority of breakouts fail. So in that breakout, you've got higher time frame traders that are um, moving in, and more often than not, they are put under heat with the price coming back into them. And even if it's momentarily, the price will come right back in to the breakout area before continuing. So I'm looking for that price to come back into the breakout area and retest these highs. So we can mark that over here as potential support. And we're looking for a retest of support, at least a retest, if not, and if it fails to support here, then you're looking for a price to, so if it fails, the retest and lower. Okay, someone asked me about the so is Nikkei then under pressure along with the US indices? And having said that, it's still on the front side of the bullish trend. Okay. It's broken this level of resistance. Might act as support on the retest. For continuation higher. All right, so I've had a few bits and bobs come out in the data. Right, any other questions, guys? I think we've covered the majority of what we all trade here. Well, there's the Aussie as well. We haven't looked at that. So this Aussie, I marked it up as a potential parabolic setup. So we've got this peak formation, aka a head and shoulders now, by the looks of things. Now the dollar is firm at the moment, but we've got, if we come down to the lower time frames, we've broken structure over here. So we came down, made a low, came up, came down, made a low. So a double bottom scenario. Now there's going to be stops below these double bottoms. So if we do come down, then don't be surprised if we wick below here and potentially move back up. But because there's going to be liquidity down here. But we are in a bullish environment now because we've broken structure to the upside in that move. Now, this is a firm resistance, and it just so happens to be at last week's lows. So we've come back in to test, so there would have been stops up here. But let's see if we don't move back up. So if we start building some bullish structure around this potential support area, above yesterday's closing price, which is this red line. So yesterday's close, potential support. If we find support in here, we could have quite a strong move, I think, up into the 61.8. We've got all of that is pretty much up for grabs. So we've already cleared some of it, all of this here, with that move up, move down, and a potential strong move up through up to test. What would that be? The 64.20s. And a 61.8 correction of that move down. All right, so rolling up the sleeves now, off to get a coffee and get ready for what could be quite a volatile day ahead, guys. So once again, really appreciate you all being here. I enjoy the interaction with you all. I love the feedback. I'm glad that I'm seeing some people making good headway, getting some good trading days out of what we go through in these meetings. So that's really good to see. And I'm just waiting for Blood Wish Pip. Okay. If you've got any questions, do let me know. Otherwise, we'll chat in the analyst room. Okay, fantastic. Really good to hear. I'm glad you're picking up on it. Yeah, it's a good template. It's very, very useful. It's got everything you need and can help you build a thesis and execute trades effectively. There's a gold analysis, a full analysis in the chat room I posted earlier. Did I not go through it here today? Maybe I didn't do it in the meeting. I apologize. I will do it now for those that are sticking around. Um, So essentially, we're still on the front side of this bearish trend. We've come into a demand area. It's not to say that we can't come lower, but we've had a number of days now short, and we're in the third day of shorts. 1, 2, 3. So this could be regarded as a potential peak formation at the bottom of this downtrend, and we're looking for a break of 1928. Now, it really depends. We're coming up towards the Wall Street Open now. We've got sort of 40 minutes or so, 50 minutes. Um, Ideally, what we want to see is the price break this trend line, but they might, it hasn't happened yet. So let's see what happens with the dollar. If the dollar sells off eventually, then that's going to be a bullish prospect for gold to go higher in the open. A potential fast move up to the 61.8 and the 78.6 into the 30s. We've got all of these Fibonacci's in the 30s to target. And then if that thesis is wrong, then the path of least resistance is to the downside, and we could come as low, we can target the last week's lows. The daily ATR is 17 figures on that, so what's the day's range so far? So we've done $6 so far. That would take us right down into last week's lows if that were to be the course of price action today, to the downside or to the upside. Right up into the highs of Tuesday. All right, guys. So have a good day ahead. Good luck. May the markets go with you all. Thanks for being here, and speak to you soon.